An agricultural land is very difficult to create, very difficult to destroy, and it retains its value. But on the flip side, a flat, it is easier to create, it does not retain its value, and it is easy to destroy also. Hi everyone, welcome to today's video. So let me start today's video by showing you a very interesting graphic which talks about the buying power of $1 over a 220-year period. There are a few interesting observations and I will take you through it. So first and foremost, you will see that if you observe the period between 1800s to mid-1935, you will see that the purchasing power of dollar used to go up, it used to come down, it used to go up, then it used to come down. But after 1935, I'm indicating it through this blue line, the purchasing power of the dollar has been going down, down and down. Now, why is this such an important video? Simply because of the fact that you would have heard people like Mr. Dalio talking about the fact that cash is trash. You would have witnessed the fact that if you keep your money in bank accounts right now, you are making 2% return on your savings account, but the inflation is 8%. So you are losing cash or fiat money, which is INR, USD, Singapore dollar at a rate of what? 6-7% also. Things are getting crazy. This is a very, very important video. I am not making this video to scare you. I am making this video so that you can systematically understand the options associated with something called as hard assets versus soft assets. Super critical video. One of the most important videos that I will do on this channel. So please watch it till the very end. Also, please press the like button. That helps. These type of videos get out to more people. I had to sit and study these complex macroeconomic topics for at least 14-15 hours before I prepared this video. So please give it a thumbs up. That will make my day. So let us get the discussion started. And for all curious souls out there, I will also give out the answer as to why there has been a secular decline of the purchasing power of US dollar here and why there used to be an up and down swings of the purchasing power of dollars here, right? So why this difference between phase 1 and phase 2? So let us get the discussion started and I will structure this video into 3 parts. 1, I will give you some historic context on what hard assets and soft assets are. Second, I will help you understand the properties of hard assets versus soft assets. Third and finally, and the most important part, what are the 3 excellent hard assets that you can own? And these are some of the hard assets in which I am also taking position. So first and foremost, let us understand the context of hard assets versus soft asset by going and looking in history. So you must have realized that there used to be gold coins also and silver coins also back in the day. Several emperors, several empires, several countries have used both silver coins also and gold coins also. But what you would observe is that the silver standard or the usage of silver as currency, it started first. For example, some of the earliest modern day empires, for example, the Sumerians or Egyptians, they used silver extensively. In fact, that phase in the history was called as the silver standard phase. And it was during this time that several prominent empires were trading in silver extensively and were using silver as a standard currency. Then over time, what happened was that many of these empires fell and the new empires that came up, for example, the British Empire, they solidified the gold standard. So gold standard simply meant that these countries or empires started using gold as a tradable currency. Now, the fascinating part about this piece of history is that many empires which switched from silver standard to gold standard became prosperous. For example, Germany, it used to be on silver standard, but after the Franco-Prussian War, it switched to gold standard. It became prosperous and it is still one of the most prosperous economies in the world right now. On the flip side, empires that did not adopt gold standard, they went down in value. For example, China, that it refused to switch to gold standard, it continued to use the silver standard, and as a result, it saw underdevelopment for a period of 50-60 years. So the important message that I'm trying to deliver here is that empires, kingdoms, people that pick the right set of assets, they go on to become rich, and people and empires and countries that invest in bad assets, they become poor over a long term. So now relating all this knowledge to modern day contemporary world as we are sitting in 2022, looking at government churning on its printer at a crazy speed. So how does all this knowledge apply in 2022? Well, it applies quite prominently now because now there are talks that the US dollar is going to fall. There are talks that Chinese currency is going to take over the world, whatnot. It's very, very important for you, especially in this juncture when the world is moving away from the primary fiat currency or the apex fiat currency, which is the US dollar. The world is moving away. I hope all of us can see that and agree to that. If the world is moving away from this fiat currency, then what are some of the hard assets that you can invest your money in right now? So for that, let us first and foremost build a framework to understand what is hard asset versus soft asset. So there are three primary differences between hard assets and soft assets. The first key difference is that a hard asset is very, very difficult to produce or increase the supply of. For example, here is the entire supply of gold and I'm showing you roughly 200 odd year data, and you can see how smooth this gradient is. This shows the rate at which the supply of gold is rising, and it roughly rises by 2 to 3% on an average per year. Why is that the case? Because gold is very difficult to mine and process. So there is only a certain rate at which that gold can be mined and processed. So therefore, the supply of gold is very limited to begin with. So now let me compare this to a soft asset, and the softest asset being the cash or fiat money. It could be US dollar, INR, etc. And let us do the same analysis for USD as to how much USD has been added into the economy over the last several years. So here is the slope for you, and you can clearly see that the gradient is not smooth at all. It is somewhat exponential in a way. And this is really worrying in a way because so much money has been added into the economy. And what does it conclusively prove? That gold supply is very hard to create, but money supply or fiat supply is very easy to create. So this is the first prominent difference between hard asset and soft asset. The second key prominent difference between a hard asset and a soft asset is that a hard asset is very difficult to destroy. For example, something like gold cannot be destroyed. It's chemically impossible to destroy gold. You can melt it, create new jewelry out of it, but you can't destroy gold. So gold is very, very difficult to destroy. But what about money? So I'll give you the example of 2016 demonetization, that money is very easy to destroy. In fact, if you have 1,000 rupee note lying somewhere, try to buy something out of it. You can't do anything with it. That's very easy to destroy, and governments can destroy money anytime that they want. So this is the second key difference between a hard asset and a soft asset. Third, and the most important difference between a hard asset and a soft asset is the amount of value that it loses with time. So again, let us revisit the chart that I was explaining you about cash or fiat money or US dollar, and let me then compare it with gold. So in order to help you understand at what rate the dollar has been destroyed, pick a very simple example. Let's assume that in 1935, you picked up like $1 and kept it under your bed. Then how much is that dollar worth now? It is worth 0.05 cent. So dollar has roughly lost 95% of its value. Now the argument that is given here is that, Akshat, you know what? The excess money printing, it leads to creation of more products in the economy. Okay, agree. But what does that have to do with anything? For example, you could have simply picked this dollar and exchanged it with gold. So now let me show you the gold chart. So let's assume that you would have purchased $744 worth of gold in 1935. In real terms, inflation adjusted, how much did it become now? It almost 3x in price. So the point that I'm trying to drive home is fairly simple, that economics is very, very complex. People get married to different asset classes. For example, consider the case of China. They were married to silver. They just assumed that, you know what, if we have silver, great, we are never going to move to gold. And guess what? They suffered for 50 more years. Similarly, right now, people are believing that, you know what, if we own fiat money, you know what, it's great asset. Government is going to take care of us. Guess what? If it does not stay as a hard asset and if it keeps losing its value, you will go bankrupt. That's the simple message that I'm trying to give you. Now, let us go back to this chart of gold, and what you will observe is that there are periods in which gold has gone down, right? For example, this period here, this period here, this period here. If you look at any of these three gradients, gold has lost more than 50% of its value also at times. So does that mean that gold is not a hard asset anymore? The answer is no, because you have to take longer term view on assets. And this is where people get confused. What you are mixing is volatility of gold, right? There are phases when the cycle of gold is such that it is not giving any returns. In fact, it is going down in value. Then there are cycles when it will give you a lot of returns. So if you study the returns of gold for over 100 years, you will realize that gold has given between 5 to 12% returns on an average. But yes, if you just keep on considering this phase 1, phase 2, phase 3, and look at that, you know what, gold fell by like 50%. How can it be a hard asset? Then unfortunately, I'll not be able to say anything. So if we study gold, then it meets all three of our criteria for a hard asset. Number one, it is very difficult to create. Only 2% supply is added. It is impossible to destruct. And over a long-term period, it does not go down in value. There can be short-term volatility, but from a long-term perspective, it is still preserving your wealth. Now, with that viewpoint and framework out of the way, let me start analyzing 3 investment opportunities in hard assets right now. And I will also explain my favorite hard asset. The first hard asset that I'm going to discuss is real estate. It is one of my favorite assets. But what type of real estate? This is where people get confused, because real estates are of different types, and the nature or the hardness of that real estate changes with the type of real estate that you are buying. So let me juxtapose this example. If you go and if you buy a flat in this 70-story building, then what is it that you are exactly owning? Then you are owning this particular unit. Now compare this with owning an agricultural land. Now again, use that same framework. That number one, is agricultural land easy to produce? The answer is no, because there is finite amount of that. Is an apartment easy to produce? The answer would be somewhat yes, because there can be another building that can be created. It can be a 50-story building. Another building can be created on this same piece of land. You yourself can create it, and then you can add 70 more units of supply. Is apartment a harder asset, or is an agricultural land a harder asset? An agricultural land is a very hard asset. Can I prove it to you? The answer is yes. How? Because the value of an agricultural land, you buy it today and you keep it for 50 years, it will go up. But if you buy a unit here and hold it for 50 years, and as your flat gets older, the value of that flat is likely to come down. So this is the difference between hard and soft asset, that an agricultural land is very difficult to create, very difficult to destroy, and it retains its value. But on the flip side, a flat, it is easier to create, it does not retain its value, and it is easy to destroy also. And what about commercial real estate? Now the commercial real estate, if you have purchased it in a good location and if you outright own it, then it becomes like an excellent investment. I will link my Hindi channel video in the comment box. You can go and check it out. I have done more analysis on the difference between a house, agricultural land, and commercial property. So you can learn more about it. But to cut the long story short here, if you're looking to invest in a hard asset called as real estate, please consider buying a plot/agricultural land or a commercial property over buying a flat. Why? Because these two assets, plot, agricultural land, or commercial property, are much harder assets compared to something like a house. So this is the first category of investment in which you should consider moving your investment in. What are some of the prominent things or problems that you will witness here? First and foremost, owning any of these 3 things outright is going to be expensive, because any type of real estate is expensive. Whether you are buying a plot, commercial property, outright house, it is going to be expensive. So what people say is that, you know what, I'm going to go and buy a REITs. Please don't do that. Here is a snippet which shows, and I'm not naming the firm, otherwise they will sue me. So here are the commissions associated with REITs. You are roughly paying 4% commission on REITs. So yeah, please be mindful before making investments in commission-oriented properties. So naturally, your question would be that, Akshat, I don't have that amount of money. I'm looking to buy a hard asset, but unfortunately, I can't buy a real estate. What is it that I should be doing? Then you can consider option 2 or option 3. Option 2 is that buy one of the hardest assets or commodities out there, which is gold. Now, there are 2-3 things that you need to remember about gold purchases. In fact, there are a lot of things, but I'll outline some important points. So first and foremost, that out of all the commodities, for example, copper, silver, diamond, gold is one of the hardest commodities that are out there. It is very difficult to increase the supply of, very difficult to destroy gold, and it usually retains its value. So this is the first key thing. Second key point that you need to remember is that the returns of gold usually lies between 5 to 12% over a long period of cycle. This is the problematic area regarding gold, because if you are investing in gold, for example, many a times we say that, you know what, I want to invest in gold. Then gold is a very bad instrument from an investment point of view. Why? Because the commodity return cycle is huge. It takes years and years to recoup your investment. And if you get stuck in a bad cycle, then you will not be making any returns. But if you are using gold as a savings instrument, so savings instrument simply means that you purchased $100 worth of gold. I'm saying worth of gold. Then worst case scenario is that it will remain at $100 only. So at least it is not going down in value. So it is much better to hold gold compared to the cash that you're holding. But yes, from an investment point of view, gold is a very bad asset to hold. And there are multiple reasons for it. First and foremost, verifying the authenticity of gold is very, very difficult unless you actually melt it. There is no way to verify the purity of gold. That's one. Second, if you are investing in jewelry, really bad investment, because again, like REITs, you are losing like 4-5% commission in terms of making charges, selling charges, whatnot. So please don't buy gold jewelry. Third and final problem with gold is that it is very difficult to store gold. If you buy gold, if you buy like kacha gold, what are you going to do with it? Are you going to stick it in a locker? You might do it. How many lockers are you going to purchase? You have to pay maintenance fees also and whatnot, right? So it becomes really difficult to store gold. This brings us to the third asset, and it's a controversial asset, and a lot of people will give a lot of negative commentary around it. I will share my perspective. I'm giving you 3 options. Whichever option works best for you, please purchase it. Which option am I investing in? I'm investing in option 1 and option 3. Option 3, I'm going to speak about. Now, the third hardest asset is Bitcoin. And let me run it through the exact same framework that I'm using for all the assets. So, number 1, is the supply of Bitcoin limited? The answer is yes. The supply is 21 million Bitcoins, and it is one of the hardest assets out there because the supply is mathematically driven as per the smart contract, and that smart contract has not undergone a fundamental shift in its 13 years of existence. So this is a fact. I'm not giving you any hypothetical things here. Second thing, can it be destroyed? No, because it is one of the most decentralized assets out there. In case you don't understand what decentralization is, please read it up. Please watch some of my other videos. But no agency controls Bitcoin. It is a smart contract. It is running like a computer code and you can't do anything with it. Then comes the third point that, hey, is it value destruction? Because I've been reading about the crypto market that Terra Luna fell by 99% and Bitcoin also fell by 50%. Okay, so let us look at numbers then. So in total, in the last 13 years, Bitcoin has given a return of 11,000%. Is it a small return? The answer is no. This is what the math tells us. Have there been phases when Bitcoin has fallen by 50%, 80%? The answer is yes. Has gold also fallen by 50%, 80%? Yes, the gold has also fallen. I've shown you last 200-year cycle on gold. Please do not confuse volatility by preservation of wealth. If there is a general decline in something, it is very different from volatility. So when you are considering these asset classes, please consider slightly longer term view. And this is what the Bitcoin data tells us. Again, stating a fact here. Now comes the final point that Akshat, you know what, Bitcoin does not have any usage. You can't buy anything with it. See guys, I cannot explain you the usage of Bitcoin in case you have made up your mind that everything is evil. Think about it this way, that I am a diversified investor. I talk about all the asset classes, including Bitcoin. So this is point 1. Regarding the usage, let me throw a couple of puzzles at you and I'll be very happy to read your commentary in the comment section. Please respond to this simple question. Let's imagine that you have to move $10 million from India to Nigeria. Try moving it through a bank. You can't do it. That's a simple point. There are layers and layers of blockages that are built. In fact, try moving like 20 lakh rupees or 30 lakh rupees from India to the US. Now you'll say that, Akshat, I don't need to move like 20 lakh rupees, 30 lakh rupees from India to the US or from US to some other country. Why do I bother? Because there are a lot of rich people who need to move that money in that bulk. Bitcoin right now is one of the prominent solutions for that. Second thing, that hey, I can't buy anything with Bitcoin. You can. In fact, there are kiosks in developed nations like the US. There are kiosks in Turkey where you can exchange any form of currency into Bitcoin. Similarly, there are governments, for example, El Salvador and bunch of other different countries that are keeping Bitcoin in their treasury. It's fine if you do not believe that narrative. This is not a push from my side to make you invest in Bitcoin. Please invest it whenever you have fundamental faith on that asset. All I'm trying to tell you is that if we have developed a framework and if we have run all 3 different asset classes that we have analyzed, please pick whatever hard assets you consider to be hard. You don't need to go and purchase Bitcoin. If you have more faith on gold, purchase gold. If you have more faith on real estate, purchase real estate. Please don't keep your money in fiat because that is going down. My favorite hard asset is Bitcoin. I can be wrong. I'm not saying that you should also believe in the same narrative. Read about it, learn about it, and depending on whichever hard assets you have faith on, you can take some investment position. I hope you enjoyed the economical historic analysis. If you did, do press the like button and I will see you tomorrow.